Hello to all of you passive income investors looking to generate passive income through dividend stocks. By the way, I think that's an excellent strategy. So in this video, I'm going to share with you my top dividend stock to buy now in April. This is my favorite dividend stock out of all of the dividend stocks that I follow, that I have in my coverage, and that I'm aware of. So in this video, I'll share with you what that dividend stock is and why I like it so much. So without further ado, let's take a look at this excellent dividend stock.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, my top dividend stock to buy now in April is Visa. Visa is my favorite dividend stock right now, and it's been my favorite dividend stock throughout 2024. I rated Visa as my top dividend stock to start the year, I would say around December 31st, and I've kept it ranked as my top dividend stock all year. Now, if you compare the performance of Visa versus the S&P dividend ETF, you'll see that Visa has outperformed. It's delivered 6.7% so far year to date, including dividends, and the S&P 500 dividend ETF has returned 5.2%, including dividends. So my top stock to buy, my top dividend stock to buy, has outperformed the dividend ETF by 150 basis points. So if you followed that recommendation, you would have beat the index, the broader index, the dividend ETF. So Visa has already done a good job so far in 2024, and I think it has more room to go. Let me share with you why that's the case. And it's not because of the dividend yield, right? I know Visa's dividend yield is not very exciting right now. Visa offers a dividend yield of 0.7% versus the broader dividend ETF, which offers a dividend yield of 2.52%. But what I like about Visa is the potential for dividend increases over time. When I'm looking at dividend stocks, I'm looking at generally a decade or more investing horizon. And when I'm looking at those longer time periods, I'm looking at companies that can sustain their dividend payments and grow their dividend payments. So the dividend that I'm getting 10 years from now is a lot higher than the dividend I'm getting today, and 20 years from now, and 30 years from now. So that's what I'm looking for. I'm not looking for the higher dividend yield right now. I'm looking for the higher dividend payment 10, 20, 30 years from now. And so I think Visa has an excellent opportunity to continue increasing that dividend payment. For one, it's because Visa has done a great job increasing revenue. 33.35 billion in trailing 12-month revenue in the most recent update. That's up from around 12 billion in 2015. So it's almost tripled its revenue in the last decade. You might think of Visa as a boring old company, but the company's done a good job increasing revenue. It's also closely correlated to inflation. When inflation increases, it has a positive correlation with Visa's revenue because Visa takes a percentage of all the spending that happens using a Visa card for the purchase. And so if purchases are increased because of inflation, if the same basket of goods is higher, then that means more revenue for Visa. Of course, that is unless spending overall decreases because of inflation. If it causes macroeconomic decrease, then of course that's bad news for Visa. But if inflation is growing along with economics growth, then it's good news for Visa because it just means more revenue for Visa as people spend more money for the same things that they were buying 10 years ago. They're paying a lot more money for those same things today. And of course, Visa takes in a percentage of each incremental revenue that comes in. Another reason I really like Visa is the operating profit margin. You could see here I've highlighted Visa's operating profit margin along with some of the most profitable companies in the world to demonstrate how good Visa is at generating profitability in its business. Visa at an operating profit margin of 67.34% is significantly higher than even the second place, which is MasterCard, its rival, at 58.29%. The next best is Altria Group, the tobacco company, at 56%. And then from there you have Nvidia at 54%, and then followed by Taiwan Semiconductor at 45%, and finally Microsoft at 44%. These are some of the most profitable companies in the world, and Visa beats them by at least 9 percentage points in terms of their operating profit margin. That's how good Visa is at operating its business. Not only is it growing its revenue, but it's growing its revenue while increasing its operating profit margin. And that operating profit margin is already a best in class, best in the world operating profit margin, and it's still increasing. So that's truly impressive. That's what has me ranking Visa as a top dividend stock. I have Visa as like a Hall of Fame company, one of the companies that is just in the Hall of Fame in terms of overall business acumen and business performance. It's just one of the best businesses in the world, and that's why I'm rating it as a top dividend stock to buy. I also own Visa stock. I've owned Visa stock for some time now. I own MasterCard as well. I like that industry. I like their position vis-a-vis competition. Visa and MasterCard don't fight with each other all that much and lower prices and hurt profitability. They're pretty tame in terms of competition, and that's worked out really well for both of them. As you can see, they both have really, really strong operating profitability. And the same can be said of Visa's cash flow from operations to sales at 60.56%. It is still best in class, although it doesn't have as large of a lead as it does in terms of operating profit margin. It's still best in class at 60.56%. Taiwan Semiconductor at 57.51% is second place, and then all the rest are at least 10 percentage points below. So you can see just how lucrative Visa's business model is, just how strong its profit generating capabilities are, and just how strong its cash flow from operations is. The cash flow from operations really demonstrates the asset-light business model. The difficult part in Visa's business was decades ago when it was building out the network. That's the hard part. That's the challenge of getting consumers to adopt your cards and getting merchants to accept your cards. That two-sided network effect was the challenge for Visa, and now that it's built it out, it's reaping those benefits. It's reaping those economies in scale, and now is the time for investors to benefit from that challenging work Visa put in decades ago. It'll be challenging for any other business to come in and take that market share away from Visa, away from MasterCard, because it was so difficult for them to achieve this. It'll be really difficult for any other company to achieve this kind of scale or to take a share of what Visa and MasterCard have built. So if you look at Visa's prospects over the next 5 years, analysts on Wall Street expect Visa to grow its earnings per share by 13.28% over the next 5 years, which is a robust rate of growth that exceeds what analysts are expecting for the S&P 500. The analysts on Wall Street expect the S&P 500 to deliver 11% earnings per share growth over the next 5 years. Visa is going to outperform the S&P 500 according to Wall Street analysts on earnings per share, which is impressive, especially for a dividend stock, right? You typically think of dividend stocks as stocks that don't increase or don't grow as quickly as the average stock. Well, in this case, Visa is growing its earnings per share faster than the S&P 500 index over the next 5 years, according to Wall Street analysts. And I tend to agree with their estimation. I think Visa's prospects over the next 5 years are better than the broader market. And finally, Visa's stock price is not cheap. I'm not going to tell you that Visa's stock price is cheap, but it's also not expensive. It's trading at a forward price to earnings of 24.88, which is about fair value for this stock. You can see it's traded at below this valuation briefly over the last few years, but it's also traded above this valuation briefly over the last few years. The 24.88 forward price to earnings is about average where it's been over the last few years. So you're paying a fair price for an absolutely excellent business, arguably the best business in the world. And so I always prefer paying a fair price for an excellent business, and that's what you're getting for Visa, and that's why I have it rated still as my top dividend stock to buy now in April 2024. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.